The following program is paid for by EG Tax. All opinions or statements expressed on this program are solely those of EG Tax or its guests and do not reflect the opinions of News Radio 930 WBEN or Odyssey.
The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930, toll free at 1-800-616-9236, and cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey everybody, this is the Tax Lady, and we got 23 days left in 2024 to effect some changes on your 2024 tax return. And it's not too late. I just did a big move the other day, a big charitable move the other day. I mean, if you want to reduce your tax bill, you still got 23 days to do it. And I'm joined in studio with Tiffany Fabian. Hi, Tiff.
Hey, happy Saturday.
Is your Christmas shopping done?
It started, and it was hard because we went away on that little vacation. I don't know. We'll just blame it on that. But we're going to go to the mall tonight, and maybe we'll get a little bit more done. Although I ordered some things online, and sometimes it's hard when you're ordering things online. It said this beautiful blue necklace, and I got it, and it was so
like
disappointing.
crap, right?
Yeah. So
That's
you can
true.
win and lose.
Well, it's interesting because I was somebody that I'm buying for said they wanted a necklace. So I looked online and I thought,
That's who I bought it
You
for.
watch, it's going to be like the weight of a feather.
Right.
And so then I went to the jewelry store and I picked out something. So,
Yeah.
and at least I know they can take it back.
Yeah,
She probably will.
jewelry's really hard online, I would say.
I agree. I agree. Okay, and I got Chris, my buddy. Hey, Christopher.
Hello, Esther.
Hello, Christopher. Okay, 23 days, and then it's 2025. And in 2025, we got the ending of the Trump tax cuts. So through December of next year, the Trump tax cuts stay in effect, but they're projecting that they're going to add more changes to those tax cuts. So we want to make sure that we get everybody lined up for that so that they know what's coming down the pike, right?
Yeah, it definitely will be interesting to see what they send down that pipe, as you said.
Right. And, and for those of you that have been getting letters from the IRS, if you have not answered those letters, you really need to. And should we tell them why?
They won't go away.
And
They're not going to process your
refund.
tax return until you answer, and they won't process any new returns. And in 23 days, we're in a new tax season again.
Correct.
So if you're somebody that's gotten a letter, and by the way, I got one myself 2 weeks ago.
You did.
And I called them and I did what I was supposed to do. I thought, this is really weird that you're making me verify, because I always owe money. So it was like, okay, do you think somebody's paid my liability? I don't think so. But anyway, but I did it. But the whole thing is you have to do this or they're not going to process your 2023 return and they won't process 2024.
That's right.
Yeah, and it was nice to see that they also do identity theft
For me.
protection for people who owe money too, because we always thought it was like holding up your refund. So it was good to see that it was evenly distributed.
It was really interesting. So
Yeah.
Anyway, so the Tax Cuts and Job Act is through 2025. I anticipate that they're going to be making some big changes, and the important thing is for you to know how those changes are going to affect you,
Right.
because it really will flavor all your decisions in your life. So many of your decisions are going to be predicated on what your tax liability is going to be. And so we want to make sure that we keep you abreast of all that as well. Okay. So, and I wanted to talk about Office 3. We moved from Kensington and Bailey to 62 Cleveland Drive, right?
Yep, Cleveland and Century and that plaza right there.
So now there is parking.
Yes.
Our poor clients would have to trudge in the snow to get into the office, so we're really thankful about that. So those of you people that went to Kensington and Bailey office, we have moved that up the street to 62 Cleveland Drive, and you can park right in front of the office.
Yeah, I put on our daughter Gracie's list of things to do to mail out something to all those apartments around there. So it's just a whole lot of people who live in that area.
Right.
So great. And they can park.
Okay. 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. And we're kind of excited. We're going to do kind of a simulcast in Florida of Ask the Tax Lady starting mid-January. So
On
WGUF
WGUF.
Radio 98.9.
Yep.
So for those people in Florida, we're going to start giving you. Now, realize the Floridians don't pay New York State taxes, right?
Well, they could.
They pay no taxes.
There's
right,
a lot of
they could if they had
snowbirds.
any income earned in New York State.
Right. There's a lot of snowbirds down there in January, February, and March. So,
Okay, so let's talk about some of the things that are being proposed under the new administration. The first thing would be that he's proposing tariffs on a lot of goods that come into the United States. The Tax Foundation is a really reputable site that we go to with their opinions, and they were saying that the changes that Trump is proposing would come up with like $4 trillion in excess liability. In other words, they would have that money not coming in. But the tariffs, they're saying, would offset that. So the problem is then foreign goods cost more, right? Mm-hmm. So it's kind of a balancing act. So
Right.
I understand that the president doesn't need any kind of approval from the legislative branch in order to impose tariffs.
right. And this is just listening to the news and other stations and everything, it's just a starting point. This is what he's saying. That we're going to.
Right. Oh, absolutely. And that's why we want to keep you abreast. So as things are unfolding, we will keep you in the loop.
Exactly.
Right?
Yes.
So here's some of the interesting things. So overtime tax exemption. So for those of you that are hourly employees who are getting paid overtime, what they're proposing, and I think this is exactly what they're going for, your overtime will be tax-free.
Yeah, which is pretty remarkable. I was talking to some people.
I mean, how many times have you heard people that work overtime say, I'm not working overtime anymore because all my money goes to taxes?
I know. I was talking to somebody and their salary, and they're like, okay, I'm just going to have my employer switch me to hourly and then make overtime and say la
and
vie.
that's interesting because everything I've read on this proposal, that's one of the things that they're thinking is people say, well, I don't want to be salary anymore, make me hourly. So I got to believe that they're going to have to do a ballet on some of this stuff and figure out a way to put some teeth into whatever they propose so that people don't do exactly what you're saying.
Right. Because that's a lot of just managers of retail stores and restaurants are salary. They may say, put me hourly. You may get presidents and CEOs of companies that would do the same thing. And so, yeah, they really got to
put some income limitations or.
So that's one thing. All right. The next thing would be.
And wait, sorry. And that's just the federal. You're still probably going to have to pay Social Security and Medicare. You're going to have to pay the state. Right. So it's not all tax-free.
Right, because I don't think New York State would go along with it.
Not at all.
The other thing is no tax on tips. So those of you that are in the service industry, that's remarkable.
Yeah.
If you get $20,000 in tips, and even if you're in the 10% tax bracket, you just save $2,000 in taxes. Yeah. Plus the FICA.
Well, wait, if they don't have to pay tax on tips, that means we don't have to tip as much anymore. So we can go back down to 15% instead of 22%.
Well, that's true. And don't you Isn't that
Everywhere.
frustrating? You look and they give you this little machine and it starts at 20, 25, and 30%.
Yeah.
Yeah.
You can dream at 30%. Hello.
Yeah, yeah. I know. Chris and I went out to dinner last night, and they gave you the machine, and right away it's already calculated. in-
Pre-programmed at
the-
25. You have to hit the button. to-
Really? You have
yeah.
to override it?
Yeah. It's crazy.
Well, anyway,
But-
so that's another, and I got, and all of these things, and this is why it's so important for you guys to know what's happening. You have a senator and a representative in your area. If you don't agree with it, just think how smart you're going to be, because these people are going to be debating, and your input should be talked to about them. So talk to them about it. That's so that you can put your 2 cents in, where so many other people will think, I don't know what's going on. You will know because you listen to Ask the Tax Lady. Anyway, I'm Esther Golias, the Tax Lady. 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930. We're going to take a short break for some advertisements. Hey, to us, you are family, and we want to take this time to talk to everybody and say thanks for listening to Ask the Tax Lady. I've been so blessed by the Buffalo Bills. You know how crazy I am.
Yes. There.
And tomorrow they're going to play again, which it just is going to drive me crazy. But I've been so blessed by the Buffalo Bills. I just love Western New York. So anyway, I'm Esther Golias, the Tax Lady from EG Tax. 8030930, 8030930, star 930 on a cell phone. The other thing that they're proposing is elimination of tax on your Social Security. Now, you can, there's about 40% of people collecting Social Security that actually pay taxes on their Social Security, and that would be a big change. And we're going to keep you abreast of that. And the other thing
Well,
is...
should we go
Yes.
to Mark, because he does have a question on Social
Okay,
Security.
good. Hey, Mark.
Hey, Esther. Happy holidays. Thank you.
Same to you.
All right. Let's assume that there's no changes for tax year 2025.
Okay.
Real quick, my situation. My wife and I are both full retirement age, 67. She's retiring January 1st, going to get about a $2,500 gross Social Security payment. I'm going to be working probably to be determined April or May of this year. My Social Security from the statement is going to also be around $2,500. My question is, how much of that is taxable? Because I'm reading up to 85%. I'm seeing some things that say 50%.
No, okay. It starts off at 50%. How much is your salary?
Well, through May, the salary will probably be ballpark figure, maybe $30,000, $35,000.
Okay.
Before I retire May 1st. That's the plan right now, to retire May 1st.
And,
so through April.
she has no wages?
She is retiring December 31st, so she'll have no wages as of January 1st.
Okay, so half your Social Security is going to be $30,000, and you're saying your wages
And
are
no
30?
pensions, bank interest,
yeah,
dividends.
Well, when I retire, I'm going to draw about a $12,000 a year pension. We do have some annuity income as well.
How much is that?
Annuity income, roughly between all of us, maybe another $10,000 or so.
So you're going to have about
Is that how much is
$50,000 in other
taxable on the
income.
annuity?
Say that again.
Is that how much is taxable on the annuity?
I'm just talking the gross distribution.
Okay, but you see, when you do an annuity and you put after-tax dollars in there, then when you have the appreciation, the
Yeah.
after-tax dollar portion is not taxable.
Yeah, I think we've had that annuity income. You guys did our taxes last year, and it was taxed at some level. The way
Yeah. Okay. All right.
Maria, I
So
think,
we got 30,000 in wages, 10,000 in annuity, 60,000 in Social Security, and any other. And how much is your other?
well, what about interest and dividend income, capital
yeah, that's
gains
what I'm
income?
saying. How much?
Well, when rates were high, probably about $30,000 in interest and dividend income.
Okay, so you're going to pay on your Social Security, on your 60,000.
Yeah.
About 85% of it will be taxable.
All right, and how is that calculated? Is there a special
All right,
line
so,
item then?
So it's
that they-
51,000 will be added to your income. So
Okay.
the 51,000 gets added to the $30,000 wages, the
Right.
$10,000 annuity, your
Yep.
interest and dividends, and then you come up with your total adjusted gross income. From that, you take off your itemized deductions or
Right.
standard deduction.
Okay, got
So
it.
it's taxed on the federal at your usual
on New York
tax rate
State, it's
and not on New
tax-free.
York State at all.
No, again, assuming no changes, and I don't think the federal change is probably going to go into effect 25, maybe 26.
Well, it's really interesting because they're talking about doing reconciliation, which would fast track the tax changes.
Oh, okay.
So listen, because we'll keep you posted.
Yeah.
That
And
would
then-
make me really happy because on 51,000 at your tax rate, it would save you about $10,000 in taxes
On the federal, nothing on,
on
the
the
state.
federal.
You mean the Social Security?
Yep.
Yep.
And can you ask the SSA to withhold taxes from
Yes.
your
You can,
Social Security?
Yes.
You can.
You can do 7, 10, 12, or
And
22%.
it's done on a W-4V form.
Gotcha.
Right.
And then
And
once,
so on the 60,000, if you did the second tier,
Yeah.
you would be more like 9,000 in withholding, and that would
Okay.
cover most of your liability.
Yep. And then one final quick question. Thank you. One final quick question. I'll let you go on the others. So I also, through my employer, have an HSA, which they contribute to. So obviously, when I retire, I'm going to start Medicare. Now, I understand that Medicare imposes some sort of tax penalty if you have contributed, or even if your employer has contributed to a HSA plan. They look back 6 months. Is that still the case? And how do they calculate the tax? Because my employer gives me a very generous HSA.
Well, you have to let your employer know you're turning 65.
Yeah, but
You should
But
not
is it
contribute after then.
but is it worth it though? Because what they can, I mean, if I pay tax, I mean, if they contribute $100 a month,
Well, it will count as
come out
income,
ahead
and
if
then
I
they
pay
do
it.
hit you, I
With the
believe,
penalty.
with the penalty as well.
Okay.
So
Okay.
I mean,
I would
really,
stop
it
it as
is
soon
not
as
correct to have your employer
Yeah.
continue.
Within 6 months from the time you.
Right.
Gotcha. All right. I'll see if they can do that. All right. Well, appreciate your help. Thank you
All
very
right,
much.
thank you.
Sounds like Mark is making lots of good decisions.
Very good decisions.
Yeah.
And it's great that he's thinking like that.
Yep.
Because you want a tax plan.
Right. Yep, yep, yep.
I had a gentleman the other day that called, and he's undergoing large medical expenses, and he's planning on taking 60,000 out of his IRA, and he's under the age of 59 and a half. So I suggested, if he did the 60,000, he was going to pay about 12,000 in taxes. Well, actually, with the state, about 15,000. And I said, but if you borrowed against your 401k, you pay zero.
Right, and then you're paying
And you pay
yourself.
yourself over the 5-year period. And, he said, you can talk about my situation on your radio show. And that's really the best thing in the world when you think about showing somebody that you're going to get the same amount of money, 60,000, but instead of paying 15 or 20,000 in taxes, you don't have to pay that if you borrow the money and pay yourself back.
And then don't forget, he could take it as a medical expense and save some taxes as well.
Absolutely. Absolutely. Well, he was saying that it was going to be a very large medical procedure.
Oh,
So,
Thoughts and
Anyway.
prayers are with him.
okay, let's talk to our buddy Larry. Hey, Larry, how you doing?
Well, Miss EG Tax, I'm doing fantastic. How are you, Esther?
I'm good. What can I do for you?
Well, dear, thank you so much. Esther, by the way, I want to give a shout out to Tiffany, too. I hear you're doing fantastic humanitarian work. So I just want to give a shout out.
Thank you. Merry Christmas. Happy holidays, Larry.
Thank you, sweetie. Same to you and yours. So, Esther, I'm calling because I'm doing research, think seriously of possibly going to a Latin American country for maybe 6 months to a year, studying there, and maybe becoming either a temporary resident or a resident. So, again, I'm still doing research on this. Wherever I would go to probably would have what they call a territorial tax system, but I just wonder, is there anything I could or should do to protect my assets if I go overseas, for that period of time?
Well, okay, so as relative to protecting your assets, you want to talk to your attorney, okay? But as far as your liability, your tax liability, as a U.S. citizen, if you aren't rescinding your citizenship, then you're going to be taxed on worldwide income. So all the income that you earn while you're maybe in Costa Rica or wherever is going to continue to be taxable on your federal return.
Okay.
So it's not going to save you any money by leaving the states unless you are no longer a U.S.
It
citizen.
will save
There-
you the Georgia
yeah,
tax.
And right, and there is a credit if you happen to be a dual citizen and pay taxes in that other country. There's a credit on your U.S. return for paying taxes to another country.
Well, the thing is, I'm not thinking of becoming, I'm not thinking of giving up my U.S. citizenship at all, but maybe just thinking, and again, I'm still doing research on this, of becoming either a temporary resident or a resident of of a Latin American country, so I can go there and study, maybe rent an apartment and take advantage of their health system. That's what I'm thinking.
Oh, I thought maybe you met an island girl somewhere, Larry.
Latin America.
Can I ask what country?
Yes, you can. I'm thinking right now, I'm leaning more towards either Colombia or Uruguay. It's what I'm thinking right now.
Have you been to Costa Rica?
I've not been to Costa Rica, although Costa Rica, I hear, is fantastic.
It really is wonderful, and they have a wonderful health system.
They do, and Costa Rica is on my list. But okay, I just wanted to kind of throw it.
But okay, so from a tax standpoint, you're
Yeah.
going to be on the hook. What Tiffany said is true if you start paying taxes in whatever country you are, but that's not going to happen. Probably. You would get a credit on your federal return for taxes paid to a foreign country, okay? But pretty much, as far as protecting your assets, you want to make sure you talk to your attorney to make sure that they put procedures, things in effect so that your assets are protected. You know, you want to make sure that you have somebody watching your home and things of that nature.
Right. Esther, last question. I wonder on the double taxing. As you said, Tiffany, I get a credit. I just wonder with the credit. I mean, basically with a credit.
Hey Larry, I got a break for. Let me hang on for a second. I got a break for news. I'll be back on the other side. We'll talk to you. Okay, Larry? Hey, to us, you are family. I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930. We got Larry from Georgia. Is it snowing there, Larry?
Yes, honey, I'm still here.
Is it snowing in Georgia?
Bless you.
No, it's very nice. Very nice.
It's snowing in Buffalo.
We'll send it your
okay.
way.
But Larry, basically, Chris is right. You might save some money on taxes in Georgia, but the federal taxes aren't going to
stay the
is going to
same.
stay the same. And as protecting your assets, you should consult legal consult.
So, Larry, ¿usted habla español?
Well, actually, yes, I do. Actually, good question. I've been going to study Spanish, but I've got one last fast question. Tiffany, you mentioned the credit, so I wouldn't be double taxed. I just wonder now. I'm not expecting to earn a lot of money or any money there really, but if I did, would my federal credit basically wash any tax liability I have for making money in the foreign country?
Chris? Yeah. Oh, he wants to know if he makes money in a Spanish country, and so then
pays
it would.
taxes.
You'll pay if you pay tax
be
to that
double
country.
taxed. You wouldn't. It would wash it out.
Yeah,
Larry.
if you pay tax to that country,
It'll wash it out.
then you would get a
credit on the
foreign
federal
tax
return.
credit
Right.
to offset that tax to that other country.
So you said it right, Larry.
So it's called a foreign tax credit.
Got it. Hey guys, love you guys. Thank you so
Love you
much.
too,
Love you
Larry.
more.
All right,
Bye.
talk to you later. I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930 on her cell phone. Okay, we have some texts.
Yeah, the first one says, "Can you take a deduction, Esther, if I bail out my 40-something child as a gift?"
Okay, so if you're giving a child a gift, okay, then a gift is a gift. If you are maintaining over 50% of the cost of the support of that child, and the child made like less than $6,000 in taxable income, then you could claim the child as a dependent on your tax return, and you would save $500 in taxes on the federal. So, it would come down to it. But if your child makes more than, it's like 50 some $100 right now. If they make more than that, then you can't claim them as a deduction, and you can't take the expenses. However, if the expenses were for medical, and the child would have been your dependent except for the fact that they had more earned income than that $5,500 figure that I mentioned, then you could take the medical as an itemized deduction.
Yeah, but you can't take a deduction for
But you can't
bailing
take a
out
deduction
your
for
Right.
child.
And-
being a good parent. No.
Right. And since it is a gift to the child, it wouldn't be taxable to that
them.
child. Now, the whole thing is, where are you taking that money from?
Well, that is very true, because if the parent takes some money out of a taxable vehicle like an IRA or pension, then the parent gets screwed,
Correct.
right?
Yes.
Yep.
So it could cost them a lot more money.
Right. So if you want to call us on Monday, we can go over all the figures. But having a wayward child kind of goes with the territory,
Yeah.
don't you think?
Yeah, it just I have family members who have gone through heartbreak, and you got to be careful.
Yep.
And all that.
So one of the other things we're talking about family members, the estate exclusion. So you could actually give a lot of money to your children. If it's over $18,000, then you have to do a gift tax return, but you don't pay any taxes on gifts until your estate exceeds $13,600,000. So you could really give a hefty gift to your kid, which would be tax-free to your kid, not deductible to you, but you wouldn't have to pay gift taxes, but you'd have to file a gift tax return
Right.
Correct.
if it's over the 18,000.
Right.
36,000 if married filing a joint return.
Correct.
Right? Okay, who's our second text?
It says, "Hi Esther and all. I do some small jobs for people, and I usually charge between $100 and $125. Do I have to claim this as it's under $600? Thank you."
Okay, all income that you make is potentially taxable. So yes, you would do a Schedule C, reduce that by your expenses, and probably you wouldn't pay any taxes at all, because you'd have to do FICA if it exceeds $400.
Yeah, and
so
we'll-
yes, you have to claim it. The $600 is a rule
for
for
mailing.
somebody that's paying you as a business expense, where they'd have to do a 1099.
Right, that's what I was
I mean,
gonna
if
say
he
for
does
the-
it for, I mean, I wonder if he means it's 600, under 600 per job. I mean, if it's under 600 per job and he does 20 jobs, that could be $10,000. Yes,
Right.
you have to claim
But
it.
still,
And-
it's still taxable.
right.
right?
And you have to, you don't have to, but you would be stupid not to write off your mileage, your tools, your safety equipment, anything you use, your business insurance, anything you use to make that money would be a write-off. So you wouldn't be paying tax on all of it anyways.
That's right. And that's what people don't understand, is that once you do it right, when you're doing something correct, many times when it comes down to the bottom line, you are cheating. It comes down so that without cheating, you get the same result.
Right.
Right.
And I remember Bill, long time ago, had a client, and he's like, I just make I make cabinets on the side. I don't want to claim the income. And Bill's, you got to. And the next year, the guy came in and he goes, you know what? Thank you for making me do that, because now I went from a $60,000 a year job to a $225,000 a year contract with the home builder, because they loved my cabinet. So where you're trying to hide, and you could be actually losing money, because if it's what you love and you're good at it, you could make a lot more money if you
it
actually.
is true, because people can suppress. It's hard to believe that somebody would say, I want to suppress my income, right? But it's people think that if you have income that you've earned on the side, let's use air quotes, that they're going to take all of it to pay taxes. That's not the truth.
Right.
It's not the truth. You take the income, reduce it by your expenses, then you pay taxes on the bottom line.
Right.
That's right.
Right. And you never pay more in taxes than you make.
Then you earn. Correct.
So
Right. Okay, I'm Esther Gillius, the tax lady, 8030930, 8030930, star 930 on our cell phone. Text us at 716-8030930. All right, things that you got to do in the next 23 days. You should think about it anyway. Make your estimated payment. Your especially somebody that might be itemizing on the federal. Your last quartered estimate on New York State is going to be a deductible as long as it's not over the $10,000 SALT deduction,
right
which
now.
they're talking about changing that to next year,
yes.
right? And your federal is due January the 15th as well. If you're going to owe the federal government more than $1,000 and you don't want to be penalized, right?
Right.
Right.
If you're doing energy conservation, new doors, windows, furnace, hot water tank insulation, that credit may be eliminated next year. Hear me, that credit may go away because they're talking about, in order to do these new tax cuts, they're talking about eliminating the credits for energy that just came into effect last year. So if you want somebody that's going to make sure that you're going to get your credit for doors, windows, furnace, hot water tank insulation for your Energy Star stuff, do the thing now.
That's right.
Because
Yeah.
next year they may be gone.
That's right. I just had somebody text me and she's like, should I put the furnace in now or should I wait till January? And so I answered the text.
Now.
Yep, that's
Now.
what I said.
Right. Because they are talking about eliminating the energy
Especially
credits.
because her,
You know.
her furnace went. I said, you're going to be cold. Do it now.
Right.
Okay.
Make contributions if you're somebody that needs to do your required minimum distribution and you're over the age of 73, then, and you're a charitable kind of person, make sure you do your qualified charitable deduction when you're doing the required minimum distribution so that will be tax-free. And again, you got 23 days to do it,
That's
Right.
right.
Yep.
right? Gifting. It's Christmas time. People they're wondering what to I have a big list of things that I have to do for people. And one of them, I'm going to do 529 plans for my grandkids.
Oh, that's very smart.
Right. And so it ends up being a tax deduction to you if you wanted to do money for your children or grandchildren's education. So that's a great Christmas gift. I mean, the kids will hate it, but you'll love it.
But the nice thing about 529s, you can also use it for K through 12 private schools, and if you don't use it, it's transferable. So
Right.
it's
In
really-
what way?
To another dependent. You could also move 10,000 of it to a Roth IRA. You could,
Right.
there's lots of different options now. They keep
All right.
changing
And
the
then the other
529
thing, we got
rules.
23 days to increase your pension deduction.
You do. And
Right.
for instance, I just had a call at the office the other day, and there was she just got her Social Security. And no, excuse me, she's still working and she has her RMD. And I said, bulk up your 401k because she's still working at the VA. And so that's a really good point that you make.
Yeah, so if you put an extra 10,000 away in your pension plan, right? In your pension plan, and you're in the 12% tax bracket, you save $1,200. I mean, you put the 10,000 away, and don't forget, they might do a match. And if you don't put the money in, it's free money that you're letting them keep.
Right.
23 days. 23 days. Okay. The other thing is, if you're somebody that's self-employed, defer income to next year. Because I'm thinking that the tax rates are going to go down next year. But pay up all of your expenses that you incurred during the year. So you're going to defer income and pay up expenses. And that'll reduce your liability.
Do you want to answer one of these texts before?
Well, no, I think I'm going to take
going
a
to-
little break here.
Before
and then
the
we'll be
break.
back with your phone calls, questions, texts. I'm Esther Gillius, the tax lady.
bills make me wanna shout. Kick your heels up and shout. Throw your hands up and shout.
I do all that. I do the shouting, the throwing up the hands. The bills do make me want to shout. They absolutely do. Okay. And we're going to pray for them for tomorrow, too. All right. I'm Esther Gilius, the tax lady from EG Tax. We got some texts here, right, Tiff?
Yeah, the first one says, "Hi guys, silly question maybe. Does dependents also include siblings?"
So a dependent could be a sibling. Actually, a dependent could even be a non-relative. Let's say somebody January the 1st knocks on your front door. They're a bum. They have no income. You bring them in. The whole year you provide all their support. They could still be, it's called an other dependent, because they're not related to you, but you furnish or more their support, and they had no income. Okay.
Yeah, but if you're
so
getting-
you'd get $500 for them. But if it's a relative and relative stops at cousin, then that's a qualified dependent, and it could qualify you to change filing status from single to head of the household.
Right.
But you'd still only get $500 for it.
But for earned income credit, a
Right.
sibling would count for EIC.
Right.
Right, but
If
I
it-
mean,
if-
had a
if-
household status could get them more than 500.
Right.
They get the $500 credit, but it gives them a higher standard deduction and a lower tax.
Right.
So-
Absolutely. Absolutely. So the whole thing is somebody that you're maintaining support for, even if they're not a relative and they have no income and they live with you the entire year, they would be your dependent. It's called a other dependent, and you get $500 off your tax bill for that.
That's right.
Okay.
Yep.
What else we got?
You want to read it, Chris?
Sure.
Esther, I am
Hey,
about-
life estate will, for a house, the way to go for parents wanting to leave home for children and not be kicked out, yet leaving home to children versus the state? Question mark.
Yeah, well, that's absolutely the way to do it. I mean, you can gift your house to your kids right now, and if you don't care that they're going to end up paying taxes on the sale upon your death when you leave it, and you really have no control, that's what would happen. But if you do a life estate, then over a period of time, the house becomes theirs. It goes through the will, and you get a stepped-up basis so that your children or your heirs don't have to pay the income taxes. So that's life estate would be what I would suggest.
Right, and I got to tell you, that text just reminded me. I got at least 2 or 3 calls on Friday from clients who received letters from New York State saying, "Hey, we see there's somebody else on your house. Please give us their name and social and how much income they make," because they did it wrong. They added their children to their house. So now for the STAR program, they could
They're
be
losing it.
Yep.
Ah. That's
The
why,
lawyer did it
it's so sad with something as complicated as taxes. When you take it upon yourself to make these decisions, you really can shoot yourself in the foot.
That's right. There's
So
a lot of
call
pieces.
call us, and we don't charge you. You can't beat the price.
Right.
We only charge you if we do tax work. But speaking of something important is the BOI.
Right.
Want to
That's
explain what that is?
that's got to get done before the end of the year. It's if you have an LLC or a corporation, which means you registered your business with the Department of State. No matter if it's New York, Florida, Hawaii, Alaska, whatever state you registered it in, you also have to register it now with the federal government. And they said you have until the end of the year to do it.
23 days.
Yep. And if you don't, you're looking at a $500 a day penalty.
Until you get to 10,000.
Right.
It doesn't take too many days to have that happen.
Right. And I know there's a case in Texas right now where they're trying to cancel that, but who knows what's going to happen. If you have a business, get it done.
Right. It's painless.
Yeah.
It's painless, right?
Yeah.
Oh, okay, what else we got? here, Tiff?
This is really important. This texter It relates to Sumitomo Rubber, which is just devastating. Over 1,500 jobs displaced. Esther, I'm about to receive severance payments from a recently closed business, a plant. If this is taxed at a higher rate than normal payroll tax, will I receive money back at the tax time as an overpayment, or a severance payment taxed at a higher rate and it will be on a different tax schedule? Thank you for your help.
Yeah, here's the thing. They will withhold at a higher rate, but it's not taxed at a higher rate. In other words, they're saying we want 25%, for instance, withheld. So they're going to take out $2,500 in federal taxes and then state of New York. But let's say when you go to file your return, in essence, you over contributed because you gave more than, if you're in the 10% tax bracket, for instance, and they tax you at 25%, you'll get 15% of that money back as a refund.
Exactly.
So they're not taxing you. They're withholding at a higher rate, but you won't pay taxes at that rate.
Right.
Right?
Yep.
Okay, anything else, Tiff?
Chris, the next one is about eBay. You want to read that?
Yeah. Talk about the tax on eBay sales and profits.
Okay.
So-
What shall we say? When you are an eBay salesperson, you're holding yourself as a self-employed person. So assuming that you're selling things to make a profit, then you're going to have your gross income from eBay, and you're going to subtract from the gross income on a Schedule C, if you're a sole proprietor, all the expenses to produce that income. Like, for instance, advertising, maybe you have a website, the cost of making the product, getting the product, eBay commissions, et cetera,
Shipping, internet.
Internet, office and home, shipping, all that reduces your gross income from eBay down to what your net profit is. And if you're using your home to make the money and you have a room exclusively used for the production of income, you also have an office and home. So that's kind of what happens.
Yeah, and nobody's talking about this right now, which they may be changing
The
it.
1099K?
Yep.
Yep.
Yeah. So right now it's set if you got paid $5,000 through eBay, through Venmo, through Cash App, through any online sales, you're going to get a 1099K. So before it used to be 20,000 or 200 items. Now they just reduced it to $5,000 for 2024. And for 2025, it's set to go to $600.
Right.
So a lot of these people who do
You
things
mean
on
the actual giving you of the form?
Yeah.
right.
Yeah. It's interesting because I was talking to a relative the other day, and I was telling that relative that if you have more than $5,000 in income this year through a Venmo or one of those third-party payers, they're going to send a 1099. And he said, "But I'm not trying to make money. I'm just." This is like for tickets and stuff. And I said, we have to include the income and then take the expense on the other form so that they'll know that it's not taxable. But if you get the 1099K, you're going to have to report it. And he was flabbergasted.
Right. And there's a lot of people like that. You take people who go out to dinner with their friends and they pay the bill to get the points on their credit card and everybody Venmos them.
Right.
That adds up.
And then you end up with the 1099K form, which could be, which the IRS starts off thinking it's taxable.
Right.
But it's when you actually do the
worksheet.
form, page 1 and the 1 and 3 schedules, worksheets. That's what makes it less not taxable, and you have to fill out those forms to let them know.
Yep.
Correct.
All right, anything else here we got?
We do. It says, I have a 19-year-old son who lives in my home. He goes to college, makes $12,000 at a part-time job. Is he still my dependent? Yes.
If you furnish over 50% of his support, yes, he is your dependent. You're going to get an education credit, American Opportunity Tax Credit, and you're going to get a New York State tax credit, assuming that he's not on full scholarship if you're paying for books and and tuition. So you want to make sure, and if you're single, you'd move to head of the household. So all of those things save you a ton of money, and maybe an earned income credit, depending upon how much you make.
Yep, you can claim your kids to the age of 24 as long as they're in school full time for at least half the year, and you provide more than 50%
And
of the support.
even though he made $12,000, he won't pay any income taxes on the federal. He'll only pay taxes on New York State.
That's
yes.
right.
Yep.
Right?
Yep. And
All right. Anything else?
there's two more. Then want to do the Roth one, Chris?
Yeah. Are Roths the same as IRAs, as that you have until April to contribute, or do Roths have to be done before the end of the year?
No, same. It's an individual retirement account. So you have till April the 15th.
Right.
The tax deadline, whatever they're doing as far as tax deadlines go.
Yes.
And then there's one more. I am 66 and get $1,000 a month in Social Security and work to make $2,000 a month. And looking at capital gains of $30,000, can I add to my IRA to offset the capital gains? 66.
All right. So the person says they have a job.
Right.
So, and if they don't have then yes, they can put money into an IRA.
Yep.
Right?
They can
and
put,
that'll become a deduction, and that'll save them money.
for 2023 it was 7,500. What are they increasing it to this year? Are they going to do 8,000
For 2025. Yeah. I mean, one thing, I would give us a call on Monday during the week so we can run the numbers, because I know you had this situation, Esther, during the week too, where you told the person, you don't have to do the IRA because your income's so low, you're not going to pay tax on that capital gains.
if they're
That's
in the
exactly
0%?
right. And because they had they had 26,000 in capital gains, and I said, but once we come up with the cost basis, you're going to be under the 15% bracket, so you're going to pay 0% in capital gains. So, and this is one of those finite things in tax law. So if you want to make yourself feel better, and if you want to make sure that you're not going to get penalized, give us a call. We'd be happy to go over everything. Other things here before we have to break for the show here. Make sure you use your cafeteria money. If you've had put money into a cafeteria plan at work, 23 days from now, if you don't use it, you lose it, and it can be taxable. Finalize your divorce if you can, because it's much better to be, especially if you're single with children, head of the household, than married filing a separate return if you're going to lose the earned income credit. So in most situations, get your divorce finalized if you possibly can. Sell losing stocks to offset gains, because it looks like the stock market really did very well this year, and so you want to make sure if you can have some losers, you can buy them back in 31 days if you have a soft spot in your heart, right? Yep. And don't forget to pay up deductible items if you're an itemizer, especially for men. I just had a client yesterday that I had dinner with, and their kid just did in vitro 3 times and has paid over $30,000 in vitro fees, and they didn't know it was deductible. Because they called their kids right away and said, Lucy, can you imagine? This is all tax deductible. So and the other thing, of course, is you want to make sure that you pay up all your medical. Well, I'm Esther Golias, the tax lady from EG Tax. Have a wonderful week. Try to stay warm. Go Bills. Thanks for listening.